The Property Bulletin by London Property, the home of superprime.
Proposed government changes targeting Airbnb-style rentals may inadvertently jeopardise over 10,000 long-term rentable properties in London, warns Labour's Westminster Council leader Adam Hugg. Despite efforts to control the holiday let market, a loophole could grant landlords permission to convert rented properties into short-term accommodation without planning consent. This move, coupled with retrospective planning permissions, could exacerbate housing shortages. Camden Labour councillor Danny Beales expressed concern, emphasising the potential loss of 6,000 homes in his borough alone. While some councils plan to implement restrictions, the nationwide rollout of permitted development rights raises further apprehension. The Department for Levelling Up underscores the need to balance tourism and housing accessibility, recognising the challenges faced by local communities. When Chancellor Jeremy Hunt announced the abolition of multiple dwellings relief, MDR, a long-standing feature of the residential stamp duty land tax, SDLT, tax experts were caught off guard. While some anticipated minor adjustments, the complete elimination of the relief was a bold and unexpected move. The question arises, was this a necessary step or an overreaction? The emergence of an industry focused on identifying properties eligible for MDR added complexity to the SDLT landscape. While some claims were legitimate, others were not, leading to improper relief. Determining the existence of a second dwelling is often complex, creating a burden for both taxpayers and HMRC. Additionally, there were questionable moral justifications for certain purchases benefiting from SDLT relief. However, many situations exist where multiple dwellings are legitimately purchased, such as investors acquiring blocks of flats. The abolition of MDR creates an anomaly, penalising purchases of 2 to 5 dwellings with higher SDLT rates compared to those buying 6 or more dwellings. This inconsistency is unfair and hurts smaller investors. For example, Investor A buying 6 flats pays a significantly lower SDLT rate than Investor B purchasing 4 flats, despite spending more. Hunt's proposed solution may not be perfect, introducing new complexities. However, many may reluctantly agree with the measure, recognising its potential benefits outweigh the drawbacks. Sadly, a better, more practical solution may not exist. High rural house prices have driven more than 500,000 people into renting over the past decade, according to a recent report, signalling a significant shift in housing dynamics outside the urban centres. The County Council's network highlights a staggering 19% increase in rural renting, surpassing the growth rates observed in London and other major cities across England. With average house prices soaring to £309,000 in rural counties, affordability has become a pressing concern for local residents. Sophie Brown, a resident of the Cotswolds, shares her struggle to find affordable housing, noting that properties often fetch prices nearing £500,000, making ownership an elusive dream for many. The influx of second home buyers and holiday lettings further exacerbates the housing shortage, forcing locals like Sophie to rely on rented accommodation. Cara Lukes from the Gloucester Rural Community Council emphasises the challenges faced by lower-income individuals, who often find themselves in insecure or inadequate housing due to limited options. The report also highlights concerning trends such as a 31% rise in private renting and a 10% increase in council house waiting lists. Additionally, rural homelessness has surged by 18% over the last 3 years, painting a bleak picture of the housing crisis gripping rural communities. Richard Kluwer, the CCN's housing and planning spokesman, stresses the need for urgent action to address these challenges. While advocating for greater focus on social housing and a review of policies impacting rental properties, the CCN calls upon the government to prioritise rural housing in its agenda. In response, the Department for Levelling Up, Housing and Communities reassures its commitment to tackling housing inequalities across urban and rural areas. With substantial investments earmarked for boosting housing supply and providing more affordable homes, the government aims to create a fair housing system that benefits all residents, regardless of their location or income level. At London Property, we talk to leading experts about market updates. Listen to our last interview with Andrew Langton, chairman of Aylesford. Will London become transient and the country the proper market? London's property landscape is undergoing a transformative shift as developers increasingly pivot towards repurposing office spaces into hotels, offering a beacon of hope for the city's struggling commercial property market. Exclusive data shared with City AM by CoStar reveals that over a quarter of office sales in the year leading up to March have been driven by buyers keen to convert these buildings into hospitality establishments. The surge in office-to-hotel conversions comes at a critical juncture for London's office sector, grappling with the challenges posed by remote work trends and sustainability mandates. Many older office buildings are falling out of favour due to their inability to meet carbon-neutral standards, while the rise of hybrid working models has resulted in excess office space. This trend gained a significant traction with the recent acquisition of the iconic BT Tower, earmarked for transformation into a hotel. The allure of repurposing lower-grade office stock at competitive prices has attracted hotel operators seeking to expand their portfolios in prime urban locations. CoStar's Director of Hospitality Analytics, Christina Balekjian, highlights the increasing appeal of office-to-hotel conversions amidst rising office vacancy rates, which are projected to reach nearly 10% by 2025. High-profile deals, such as Asif Aziz's acquisition of Haymarket House in Soho and the sale of the BT Tower to US hotels giant MCR Hotels, underscores the momentum behind this trend. Owner-operators like Whitbread have been particularly active in seizing opportunities presented by redundant office spaces, with a strategic focus on identifying suitable properties for hotel development. Whitbread has spearheaded notable projects such as the conversion of New London House in the City of London into a mixed-use hotel-led development. The City of London emerges as a focal point for such transformations, buoyed by relaxed planning requirements announced by the City of London Corporation. This regulatory flexibility has contributed to a surge in office-to-hotel acquisitions, signalling a promising outlook for investors and operators alike. As London's property market continues to evolve in response to shifting demands and sustainability imperatives, the trend of repurposing office spaces into hotels is poised to play a pivotal role in revitalising urban landscapes and driving economic growth. At London Property, we have collaborated with Basil Demarutis of 4 Partnership, a leader in green build and commercial real estate. The service we provide is a sustainability health check. Basil and his team can audit the building and even fund the works. Contact us for more information. Marc von Grundherr, the director of Benham and Reeves, is advocating for an end to what he deems an archaic system that places the burden of stamp duty land tax, SDLT, on tenants. Von Grundherr argues that SDLT poses a significant financial obstacle for home buyers nationwide, hindering their ability to ascend the property ladder. He highlights an often overlooked aspect. Tenants can also be subject to SDLT, particularly those at the upper echelons of the rental market. Since December 2003, long-term residential tenancies have been susceptible to SDLT if a lease of under 7 years surpasses the nil-rate threshold concerning chargeable considerations. The HMRC Leasehold Sales on SDLT guidance outlines a 5- and 7-year timeframe for SDLT. Additionally, if a lease is considered a successive linked lease, where the tenancy agreement is renewed between the same parties and with the same terms, SDLT becomes due when government-determined thresholds are exceeded. Previously set at £125,000, the threshold was raised to £250,000 during Liz Truss's tenure, yet it remains unchanged. This means SDLT becomes payable once the cumulative rent paid over the lease's duration, known as the net present value, surpasses this threshold. For most tenants, this threat may not materialise, as they do not rent properties at this financial level or for a prolonged period. However, for those at the pinnacle of London's rental market, the threat is genuine. Benham and Reeves examined a prime property with a weekly asking rent of £40,000. This property would accrue an estimated total NPV exceeding £2 million per year, far surpassing the £250,000 threshold. Consequently, approximately £1.76 million becomes liable for stamp duty tax, equating to a payment of £17,597 after crossing the threshold within a single year's tenancy. Von Grundherr emphasises that while those capable of affording a £40,000 weekly rental may not flinch at paying an additional £18,000 annually in stamp duty, the issue extends beyond financial means. He contends that it's time to eliminate this outdated government tax scheme, which penalises both buyers and renters across the sales and rental markets. The subsidiary of Lazary Investments, part of a billionaire family's property empire, has been fined £67,000 for breaching HMO licence conditions on Camden flats. The Lazary family, with an estimated fortune of £2.5 billion, owns prime London properties, including the former Fenwick department store. Last July, Lazary Properties 1 was fined and named on London's rogue landlord list for violations in 3 flats. Despite these fines, Lazary Investments plans to redevelop properties like 63 New Bond Street. The family, led by Cypriot-born Christos Lazary and his children, continues to expand their real estate portfolio. Lazary Investments stated they're rectifying breaches to ensure tenant safety.
Subscribe to our newsletter to receive our weekly bulletins and stay ahead of what's shaping the super prime property market.